40%, which is nearly around 250 crore or 240 crore. So additional 100 crore saving will be there only by TKD. And once we are able to do it at TKD, the whole plan is to proliferate the same method for remaining 25 depots also.
Yes, sir.
Yeah.
So essentially what you are saying is that this number, if things pan out as you are thinking, can even fall to like a 300 crore odd level for the overall company. I mean, if things pan out.
Lower than that. If we are able to, the board has told us to give the biggest case, that is TKD, for which my CMD has already written a few months back. That is under consideration. Once it is through, every depot is under the purview, because we have got the first right of refusal provision in the Gati Shakti scheme for brownfield depots also. Right. So your assessment is bang on that if everything materializes, then my payout will come down by minimum 100 to 120 crores.
So that's quite a big number.
Because you see the 6% will come down to 1.5%.
Yes.
And the other portion is directly linked with my number of trains that we are running. So if I run more trains, I pay. If I don't run many number of trains, there is no fixed payout for me. So that is a good scheme that government has launched, and we are very hopeful and willing to participate to that for long term.
Yes, sir. Sir, if I can just squeeze one more question in. So this is regarding pricing. So of course you told that service levels matter more than what the competitors are pricing. So how difficult, let's say if I ask you, for competition to match up to your service levels, can you give some examples of the gap between you and competition, like what you are doing versus what they can't practically do?
See, actually, we are running timetable trains in collaboration with Indian Railways from our MMLP Dadri to Mundra Port, which is taking the train to Mundra Port in 38 hours. So it's a predictability in service when the shippers know that their containers will be able to catch the vessels. That is a very crucial product that I am offering, which is very well received by the trade. Secondly, the MMLPs that I have established, I have set up 16 MMLPs in the country, which are a big cargo aggregation center, and all value-added services, warehousing, container stacking, everything is under one roof. So customer doesn't have to go from here to there. So, and this has been very well received by the customers. Third and very crucial fact is the IT-based solutions, IT-based services that I provide to my customers, which is very well patronized by them. And I have started a logistics app through which customers can book their cargo for first mile, last mile through reverse auction, very competitive rate and efficiently. And I have also started AI-based system at Tughlakabad for terminal management. It's a pilot project. It is working very well. I plan to slowly replicate it to other terminals also. So all these things and the customer connect that my people have, that also plays a very important role. We have been a trusted logistics partner for our customers for last more than 30 years, and customers are very happy with our services. In fact, wherever I myself and my directors, whenever we go on a field visit, we always make it a important point that we will meet our customers. So all these things over the years, they have developed a feeling of trust and faith, which keeps them from not moving anywhere else.
Yes, sir, that's great to hear. That's all from my side. I will get back in the queue for further questions.
Thank you. Next question is from the line of Rohit Maheshwari from Tata AIG. Please go ahead. Mr. Maheshwari, your line is unmuted. Please proceed.
Okay, thank you. My question has been answered.
Sorry, sir, you're not audible clearly.
I'm saying thank you. My question has been answered.
Okay, thank you. Next question is from the line of Atul Tiwari from Citigroup. Please go ahead.
Yes, sir. Thanks a lot, sir. So just, again, one question on the very strong guidance that you have given for the EXIM growth next year. Could you give some more color how the lead distances will change? I mean, is it mostly the short distance cargo that you are planning to bring from roads to rail, which will drive the growth? And will the revenue also grow in the same ratio, 15% year on year, or will the revenue growth will be lower than 15%?
The lead will be more or less the same. Like if you see last year, our lead in EXIM, it has grown from 670 kilometers to 712 kilometers, which is 42 kilometers growth, which is quite a good number. So lead will continue to be around 712 or 720, 25. So that will be the lead that will be maintained in this financial year also. And as far as the revenue growth is concerned, we hope to have a good revenue growth also. At the moment, we can say that it will be almost same. Because if you see revenue growth this year in physical as well as revenue, they are almost matching.
Okay. And so my final question is on the pass-through of haulage charges. So how is the pricing environment, and if there is any hike, etc., do you expect to completely pass it through, or you are still kind of absorbing some of the impact?
See, railway has actually that busy season surcharge that they introduced from October. In EXIM segment, we have passed through the entire amount. In domestic segment, we have passed strategically. We have not passed everywhere. Depending on the stream, depending on the capability of the customers to absorb that hike, we have strategically passed. So it is not that everywhere we have passed just like that.
Okay, sir. Okay, thank you. Thanks a lot.
Thank you. Next question is from the line of Pulkit Patil from Goldman Sachs. Please go ahead.
Sir, thank you for taking my question. Sir, I'm unable to understand that if originating and handling volume growth is going to be same, are we saying we are not going to be increasing double stacking? Because our understanding was, and correct me if it was wrong, is that as the impact of DFC becomes more prominent, double stacking will be a larger part, volumes would be broken at multiple areas, in which case the growth in handling should ideally be higher than growth in originating. So how come your guidance is actually talking about similar growth in both of the segments? That's question number one.
So you see, Pulkit, if you see the growth in this FY in ISO, we have grown by, handling has grown by 7.08%, whereas originating has grown by 7.59%. So they are not exactly the same number, but more than 7%, they are very, very close. So I told that percentage-wise, because handling has got a bigger base, almost, originating is almost 70 to 75% of handling. So numbers will be more or less hovering around the same quantity. So it may not be exactly same, but as you see in this financial year also, we have done record double stacking. Still originating and handling are almost very close to each other.
So Dadri has reduced because Dadri has gone.
So these things will be almost around the very close numbers, both of them.
Sure, sir. So my second question is on the overall guidance. I think a few of my other participants also asked this, that when we look at the last 4 or 5 years, our growth has not really been as strong. Now, obviously, the guidance you've given is super strong. Just a sense of whether global trade is looking so good, there's no impact of Red Sea whatsoever. Just like the underlying what you see in terms of what drives such strong demand in terms of the guidance that you've given.
See, Pulkit, actually, as I explained earlier, we are very, very confident of diversion of lot of traffic from road to rail due to our sustained efforts in doing so. We are in touch with our customers, and they have assured us that they will be giving more and more volume on rail. As I told you, a couple of steps that we are taking, like double stacking of Nhava Sheva cargo also. Secondly, DPT movement in a big way. So all these, and traffic at new terminals, all these things will be the engines of growth in this financial year. So you will see the results very soon.
Good, sir. Very good to hear that. Thank you.
Thank you. Next question is from the line of Abhishek from DSP. Please proceed.
Yeah, hi, sir. Thanks for the opportunity. Sir, if you can help us understand as far as the EXIM segment is concerned, how is the pricing scenario? Because, at some point in time, we had seen peers kind of resorting to aggressive pricing. Does that still continue or has that normalized? Any thoughts on that, sir?
See, normally in these conference calls, I don't talk about what PCTOs are charging in pricing. So we are actually watching our strategy, that is giving excellent service to customers while maintaining the reasonable amount of margins. What others are doing, normally we keep a watch, but I don't talk on these forums.
Okay, sir. So, but just, if you look at it for last 4-5 years, this kind of a volume growth you have not seen. Now, if suppose that 15% kind of volume growth comes in, because, there's an element of operating leverage, there is an element of, better or reduced empty running. So can that help you in margin, and will you use that lever to, lower down the pricing? Any thoughts, sir? Because we haven't seen this kind of growth for a long time. So any thoughts on that, sir?
We are very confident of getting this growth, but as far as margins are concerned, I will still maintain that we will be around EBITDA of 25%. We will maintain. We will not reduce our margins.
Okay. And sir, this on the Dadri front, now that has got connected to the DFCC. So how are you seeing traction around that? Our channel check suggests that you are gaining traction. Any thoughts on if you can help us understand with that?
See, the connection of Dadri to DFC has been a game changer as far as the logistics scenario of our country is concerned. We are able to run timetable freight express trains from Dadri to Mundra, which is taking containers in 38 hours. Now, very soon we will be launching a product of double stack train from Dadri to Baroda, because the JLPT, it will take some time to be commissioned on DFC. So we will bring double stack train from Dadri to Baroda, that is Varnama terminal. So all these things, and that will try to have timetable service, and all these things will be definitely very, very main this drivers for bringing more logistics efficiency, and supply chain cost will come down in our country.
Got that, sir. Thank you so much, and wish you all the best, sir. Thank you so much.
Thank you.
Thank you. Next question is from the line of Anupam Goswami from Sud Life Insurance. Please go ahead.
Yeah, hi sir. So I joined the call a little late. Can you just briefly explain what led to a realization decline in this, and going forward, what's your LLF expectation on that provisioning?
What do you mean by realization decline?
Sir, I see a little EXIM realization decline. So do we take it as a one-off sort of, or where do we see that?
There was slightly decline in realization because we absorbed the rail haulage increase for 40 days. So that briefly, that was a temporary decline. That will not be there in this financial year.
Okay. And going forward, do you see a EXIM volume outpacing domestic growth?
See, there are two different segments. So EXIM will see growth of 15%. Domestic will see growth of 25% in this financial year. Combined, it will be growth of 18 to 20%.
Okay. And yes, sir, last on the LLF provisioning, what's your guidance on that? Like, how do we see that in the FY25?
I will request my Director of Finance to give you this guidance.
So for the current FY, if you missed the discussion, we had a long discussion on LLF going forward. So the one answer to the question is this year our provisions will be hovering around 400 crores to 420 crores. As we have already surrendered 60,000 square meter of land in TKD, which is the costliest part of my railway parcels. Apart from that, we have also mentioned in this con call in the earlier Q&A that we have applied for inclusion in Gati Shakti scheme. If we get that inclusion, which we are entitled for, then the payment will further come down for TKD, which is nearly 60% of my total payout, by nearly 80 to 100 crores.
Okay.
Okay. And that would, even that, you are sensing a margin expansion if that comes?
Margin?
Would it increase the margin, and how much would it improve the margins if that comes?
Yeah, you will come to know all these things in the coming days, coming weeks.
As our CMD mentioned, that 25% is a very healthy margin that we are maintaining in our logistics business. So that is not compromised. But detailed business strategy, that cannot be discussed here right now.
Okay. Understood, sir. Got back. I'll get back in the queue.
Thank you. Next question is from the line of Krupa Shankar from Avendus Spark. Please go ahead.
Good afternoon, and thank you for the opportunity. My first question is on the domestic piece of it. So you've given a strong guidance of almost 25%. Can you highlight specifically, while I do understand the bulk cement was one of the key drivers for domestic, what are the other triggers you're seeing with respect to domestic?
So I will request my director domestic to take this question.
Actually, you see that with respect to bulk cement, earlier we planned that we shall be moving the bulk cement in general purpose containers. We started also, and then subsequently after a year or so, on 21st of May 2023, that circular was withdrawn by the railway that the charging in general purpose container was at FHA. And we continued chasing with the railway, but that circular was not revised. So now, actually, that initiative what Container Corporation took, that was stopped. But since bulk cement has a very huge market, a lot of bulk cement is moving. You see that roughly if we take around 300 million ton of production of the bulk cement in the country, so 25% is moving by road. Either in bulkers or mainly in bulkers. So 25% means 75 million tons. So what we have now decided is that we shall be introducing tank containers, cement tank container for tapping this market. We have done groundwork. We floated an EOI also in which who of the cement industry they participated, and everybody has shown quite great interest to collaborate with Container Corporation for movement of bulk cement. So we are in the process of procurement of cement tank containers. My estimate is that within 2 to 3 months we will start getting these tank containers. So from not in the initial first 2 quarters, but subsequently third and fourth quarter, we are expecting that we shall start getting the benefit of this tank loose cement movement in the tank container, and that is going to add quite substantial amount to our growth. In addition, the last year there has been lot of restriction by government. Rice was basically stopped movement in the for export, and bag cement container availability of BCL wagon in railways became quite high, and we lost quite substantially on these two commodities. But now we are expecting that those things are going to be removed, and whatever 30 to 40,000 containers we lost on these 2-3 commodities, that is again going to come to us. So in addition to bulk cement in general in tank container and the commodities which we lost last year, that was going to be added to the growth of the country in the domestic segment basically. So combined 2-3 things, we are quite hopeful that the guidance given by our CMD with regard to 25% domestic growth is going to be realized basically.
Thank you very much. That's quite clear. And a couple of bookkeeping questions, sir. On port-wise market share, what would be your share of or volumes originating from JNPT Mundra Pipavav, if you can share that? Hello?
It seems that we have lost the connection for the management. Please stay connected while we reconnect them. Ladies and gentlemen, thank you for patiently holding. We have the management line reconnected. Sir, we have Mr. Kripashankar connected.
Right. Sir, sorry. My second question was more on port-wise volume contribution to our overall pie, as well as our market share in respective ports. If you can share that, please.
Yeah, contribution of port is like this. JNPT 32.5%, Mundra Port 35.3%, Pipavav 11.3%, Vizag 7.3%, Chennai 4.3%, Vallarpadam 3.3%, Tuticorin 2%. So that takes care of around 97% of volumes. And market share at JNPT 60%, Mundra Port 37%, Pipavav Port 47%.
Thank you very much, sir. I'll get back with you.
Okay.
Thank you. Next question is from the line of Amit Bhide from Morgan Stanley. Please go ahead.
Yeah, hi sir, Girish from Morgan Stanley. I just had a couple of questions on rail coefficients, if you can help for the full year ending at different ports.
Just now I told the rail coefficient at JNPT is 17%, Mundra Port 26%, Pipavav Port 63%.
So whenever you give this data around volume at different ports or coefficient, you are talking about the YTD number, right? And not for the quarter. Normally you communicate this.
Yes, that's right.
Okay. Now, just a second question. I know this question has been asked in different forms, but you obviously could have some benefit basis how the policy on LLF plays out. You could also have DFC, which will become bigger as Western DFC gets commissioned. My question was a simple one, that if you had to choose between volume and margins, is it fair to say that you would be focused more on volumes and maintain margins, or am I getting it wrong?
We will like to keep a balance between the two, and we want to maintain our margins, EBITDA at 25%. That we are very, very committed to do that. And while maintaining the margins, if we are getting more volumes, then they are welcome.
Okay. And this step up in domestic, sir explained was happening because of partly cement, but is there any other commodity which is changing our outlook on growth?
I think Director Domestic was explaining it, but call got disconnected. I will request him to again briefly tell.
Thank you.
Actually, you see in the domestic segment, whatever bulk cement movement in tank containers, the new initiative, what we have taken, and that is going to materialize, I think, within 2 to 3 months. So not in the first 2 quarters, but we are confident in the last 2 quarters we will get the full benefit of this new initiative. So that is number one. Number two, you know that in October, from October 1st, the railway increased that busy season surcharge. So there were panic in the market, but now the things have been streamlined, and we have started again getting benefit after passing some portion of busy season surcharge to customer and absorbing some. So I think that thing is again settled. Number 3 point, what I wanted to mention is that last year the 3 to 4 commodities combined together around 40 to 50,000 TUs we lost because of one policy or the other, like rice. Rice was stopped by the government for export. Now that is going to be revised, whatever we have heard. Number 2, the cement in bag condition. The bag cement, we were doing quite good numbers, but that was again stopped because of the good availability of the railway wagon. So now that demand is again with us, and we are going to get good numbers, whatever we used to get the bag cement in general. Number 3, that because of busy season surcharge, lot of salt business, whatever we were having from Ahmedabad, around 10,000 TU we lost, and the parties started moving by road. So these things, actually, because of busy season surcharge, because of government policies here and there, I think those volume around 40 to 50,000, we are quite hopeful that we are going to get. In addition, as I told you, that bulk cement movement in tank container, that is going to give us good volume. So combined together, whatever our CMD has given a guidance of 25% growth in domestic, that we are quite hopeful that we shall be getting those.
Mr. Amit, does this answer your question?
Sorry, last question on capex. The number was, I think, running at 700 to 800 crores per year, and we've put the number at 600 crores. Just wanted to understand, will this number probably be sustaining at these levels going forward? And is there a way to understand the capacity utilization or efficiency in the way the trains, wagons are being utilized currently? If you can qualitatively comment on that as well. Thank you.
See, actually, last year also we have, in FY24, we have achieved 745 crore rupees capex. This year, at the start of the year, we have kept at 610 crores, and this will be subject to mid-year review, which we will be conducting after Q2. So, based on our demand, we can increase the capex also. There is no issue on that. As far as utilization of our the capital that we are using for purchasing new wagons, new containers, I want to assure all our investors that we are making a good utilization of all the instruments that we have, and nothing is idling at the moment.
Thank you very much, sir.
Thank you. Next question is from the line of Lavina Q from Geoffreys. Please go ahead.
Hello, sir. Just wanted to check that rail haulage hike which Indian Railways had done in 3Q. Sorry if I missed it, if you've commented on this earlier. So I remember you had mentioned most of the pass-through had been done in the December quarter itself. Just wanted to double check that has it been completely done? Is the margin impact completely in place so that going forward with volume growth, you'll see better operating leverage? Thanks.
Yes, absolutely. You are absolutely right. Whatever pass-through strategically in domestic and 100% in exim has already been done. It is all stabilized. So henceforth, there will not be any plus minus. You are absolutely right.
And so just lastly on this, do you think, this road to rail shift, on this call you're sounding extremely confident. Do you think that maybe because of the rail haulage hike, something that could have happened last quarter is just being delayed by 3 to 6 months? So essentially that is driving your confidence that now customers are saying we're definitely going to move given that haulage is stabilized? Is that fair to say?
That may be one of the reasons, and second is the service level that they are, that assurance that they have, that we will be able to transport their containers in a very, very efficient manner. So they are very confident. Plus, there may be after the elections are over, there may be some revision in diesel prices also that may impact the road rates. That is also possible. One of the possibilities.
Understood. Sir, and lastly, again, sorry in case you addressed this earlier, we'll check with the dedicated freight corridor as well. But on the ground, JNPT led by 26, is that the broad feedback? Just to understand.
Yeah, as for the dedicated freight corridor officers, JNPT will be commissioned on DFC by March 2025. That is the projection they have given.
Excellent. Thank you.
Thank you.
Thank you. Next question is from the line of Ms. Bhumika Nair from DAM Capital. Please go ahead.
Yes, sir. Just one follow-up question that I had was on this conversion of the TKD facility into a Gati Shakti terminal. Yours, sir, as per the Gati Shakti, will there be a requirement to share any percentage of revenues per se with the government as it typically is the norm, or we will not have to share any revenue share or anything of that sort?
No. So you understand it in a very clear manner. The old method is flat 6% of the industrial value of the land. This is what we are doing right now as a brownfield depot in old system. Now the new system that has been offered, it has got two components, a fixed component and a variable component. Now fixed component is 1.5%. The 6% has become 1.5%. This is fixed. Whether you run a single train, you don't run any train, or you run any number of trains, this is a fixed component. Now coming to this variable thing that you were mentioning, that is a revenue sharing. There is not revenue sharing. It is traffic access charges. The railway charges amount on every rake that is handled in their land. This is right now also in their goods sales, the same thing is being followed. So that value right now is 1.6 lakhs per rake. So for me, for any 90 containers that I'm handling in a rake, I'll have to pay that 1.6 lakhs, which is nearly 15 to 1600 rupees per container. Now taking these together, These two things together and what I'm paying is 6% is nearly 60% of what I'm paying today. That is what I try to reason out. I hope I have clarified.
Yes, sir. Yes, sir. That is quite clear. Now it's understood. Fair point. So just last thing, if I can get the lead distances for the quarter and for the year, sir.
So we have it for the year. It is for EXIM it is 712 kilometers, domestic 1406 kilometers, total 823 kilometers.
Got it, sir. Thank you so much.
Thank you. Next question is from the line of Amil Virani from JP Morgan. Please proceed.
Yes, hi sir. Thanks for the opportunity. Most of my questions have been answered. I just want to raise two things. A, your guidance for growth in FY25. Does it, capture some kind of market share increase? Because in the last 2-3 years, I think there has been some small market share losses. So are you expecting to regain some market share, or do you think that the market itself is going to be so strong in domestic and exit?
I think we will be able to gain some market share.
Okay. And sir, lastly, I don't know if you've already shared this, the rail freight margin for the quarter.
Rail freight margin?
Yeah.
1 minute. Rail freight margin is 25.1% for the year.
For the year. Okay, sir. Thank you.
Thank you. Next question is from the line of Atul Tiwari from Citigroup. Please go ahead.
Sir, again, the question was on the DFC. So you said that it will be connected to JNPT by March 25 as per the current estimate, right?
Yes.
Is that
the information? As per information given by DFC officers.
Okay, but then how is it supposed to benefit us in FY25 by in running the double stack train to Nhava Sheva?
Now the thing is that DFC will not be commissioned up to Nhava Sheva, but I have a terminal at Baroda, which is approximately 400 kilometers from Nhava Sheva. So that terminal is unique. It is connected to DFC as well as to Indian Railways. So what I will do is from NCR region, I will run double stack up to that Baroda terminal. There I will break it up into 2 single stacks and take it to Nhava Sheva. So major distance, like almost 3/4 of the distance from NCR to Nhava Sheva, I will be running on DFC, running on double stack, and for the 1/4 portion, I will be running on single stack. So that will derive maximum cost benefit to our customers, and efficiency will also go up.
Okay. Thank you. Very clear. Thank you.
Thank you. Next question is from the line of Kushal Chopra from RV Invest. Please go ahead.
Thank you, sir. My effort is to gauge the overall economic outlook of the country, as we are seeing that the various PLI schemes of the government is motivating the corporates to get into the manufacturing side of the economy and boost it. So from which areas of the country or which states or which regions are we seeing a good amount of growth in container handling? So if you can just give an insight in this economic indicator. Thank you.
See, as far as about the overall economic scenario in the country, I am not the best person to answer the question. But as far as container business is concerned, I can probably give you some insights. As far as EXIM business is concerned, almost 65 to 70% of the business is concentrated in western part of our country and north. And other than that, domestic, we have lot of business throughout the country. It has lot of potential. Cement business, as we are talking, which will be the main engine of growth in this financial year, that is around cement clusters, mostly in South India or some in western side also. And plus tiles business is there in Gujarat. Plus we have a lot of business in Gujarat area where other commodities like cement, white cement, they are also there.
Okay. So the second question is in the line of market share. We have been losing the market share since the last data has come down to 57% from 63%. So the other private competitors, are they aggressively ramping up their capacities? So due to that reason, are we seeing a market share loss?
See, it has been a conscious decision of the company not to sacrifice our margins for gaining market share. We are retaining our customers, getting new customers while maintaining our margins. So that is the primary reason. If I want to gain market share, it's very easy for me, sacrifice margin and take market share of 80%, but that is not my objective. I maintain my margin, maintain my service level. At the same time, I have a reasonable market share also.
Sir, we have been getting 30 to 40,000 containers in the commodities and grains and rice sector. So post-elections, are we indicating towards the exports of rice that will be getting resumed?
See, I am not in a position to answer this question because this is related to the policy of the Government of India, which I am not competent to comment in this conference call.
Okay. Thank you, sir.
Thank you. Next question is from the line of Shine Karlekar from HSBC. Please proceed.
Yeah, hi. Thank you for the opportunity. Sir, I wanted to know how much of our originating volume on a full year basis originates from the Northwest corridor, which is likely to benefit from full commissioning of DFC. And second related question is, sir, out of that volume which is originating from Northwest, what percentage of 40 feet containers are already getting double stacked?
See, that data we don't have at the moment, that how much volume is originating from which region. We have the pan-India numbers, which already I have given to you. And as far as double stacking is concerned, I can tell you that if you see our overall volume, almost 15% is double stacked. 15 to 20% is being double stacked right now.
Of overall volume, yeah?
Yes, that's right.
And here, in the denominator, we are talking only about the 40 feet container here, or we are talking about denominator being 20 feet plus 40 feet?
We are talking about 20 plus 40, both.
Okay. And typically, we would say, sir, how much is 40 feet container in overall mix?
See, in our company, I am not in a moment to, not in a position to reply to you, but as per the broad industry estimates, 40 feet container will be around 55 to 60%.
Okay, fair enough. And sir, if I may ask, how has this financial year started? Are you seeing a sharp uptick in volume growth from the run rate we saw in the last quarter?
We are very optimistic. Other than that, I think in next conference call only we can reply to this question. We are talking about only up to 31st March.
Fair enough, sir. Thank you for answering my questions and all the very best.
Thank you.
Thank you. Next question is from the line of Aditya Moria from Kotak. Please go ahead.
Thank you, sir, for the opportunity. My first question kind of revolves around the rail coefficient in Mundra not having meaningfully changed over time because of double stacking, otherwise going up. I wanted to get to know from you what could be the reason.
Sorry to interrupt, Mr. Moria. Your voice is breaking.
Am I audible to you now?
Yes, this is better. Please proceed.
Okay. So the first question that I had was more on the modal share.
Mr. Moria, you are not audible.
I think I'll get back into this. Thank you.
Thank you. Next question is from the line of Vikram Suryavanshi from Phillip Capital. Please go ahead.
Yeah, hi. Good afternoon, sir. I have two questions. One, when we talk about terminals under Gati Shakti, can they be used as an exclusive terminal for us, or it has to be common user facility?
No, they are the terminals on our land, So they are exclusive for us.
Okay, got it. And this domestic cargo side, obviously there were restrictions keep coming and going for certain type of cargo. But bulk cement also, I think we were looking for opportunity of flexi bags for bulk cement movement. And now what I'm hearing is about, I think, tankers. So is there any change in the policy or some, how is that a different opportunity?
See, bulk cement in normal containers was not a very, sustainable business. Like my director domestic has replied earlier, the railway also did not give extension for the FAK rates. So now we are launching a new product in the market, that is transportation of bulk cement in tank containers, which is a sustainable business for us. And we are very hopeful of getting a lot of volumes by introduction of this new product.
Understood. That was helpful, sir.
Thank you. Ladies and gentlemen, we will take this as the last question for the day. I would now like to hand the conference over to Ms. Bhumika Nair for the closing comments.
Yes, I would